You're with Trading Hour, and the focus now shifts to our special segment, Fin Street. Operating profits have been weak in the first quarter for banks due to treasury losses and higher OPEX expenditures. Abhishek is here to tell us how Q1 panned out. Abhishek.
Well, banking sector reported a weak operational quarter in terms of operating profits, which was marked by the fact that, there were treasury losses and higher operating expenses. However, net NPA ratio of the PSU banks fell to less than 2%, perhaps for the first time in last 7 years or even more. Let's take a look as to how the Q1 FY23 has panned out for the sector. To begin with, the P&L performance, GSEC yields had hardened in Q1 FY23. This had an impact on the treasury portfolio for many of the banks, and operating profits also of the banks declined by about 9% YOY and 10.5% sequentially. For PSU banks, the operating profits fell by almost 17% YOY and more than 15% sequentially. While on the other hand, for private sector banks, the operating profits grew by a marginal 0.5% YOY and fell by 5.3% quarter on quarter. The banking sector reported net profits of 44,145 crores, which was up more than 37% YOY, but it declined by 9.5% sequentially. So for PSU banks, the profit stood at 16,064 crores, which was up nearly 10% YOY, but it declined by 12.5% sequentially. While on the other hand, private banks reported a total profit of 28,082 crores, up nearly 60% YOY, but it declined by 7.6% sequentially. The total restructured book of the sector now improved to 1.98% of the loans versus nearly 2.2% of the loans in the previous quarter. The lowest share of restructured book is of Kotak Bank, Axis Bank, CSB Bank, SDFC Bank, SBI as well as ICICI Bank. Now, mixed performance was seen on slippages front, was witnessed in Q1 FY23, given the fact that, slippages increased by 7.3% quarter on quarter for the banking sector. Annualized slippage ratio, however, increased by only 10 basis points quarter on quarter to 2.32% when compared to 2.22% in the previous quarter. It was a mixed performance with respect to slippages. PSU banks saw slippages decline by 4.5% quarter on quarter, while on the other hand, in absolute value, we saw slippages increase by nearly 28% quarter on quarter for the private sector banks. The good news on asset quality is that PSU banks have now reported the lowest net NPA ratio in last 27 quarters or 7 years. It has now fallen to below 2% level. So gross NPA ratio of the entire banking sector declined to now less than 6%, that is about 5.94% when compared to 6.18% in the previous quarter. And net NPA ratio of the banking sector was around 1.6% when compared to 1.7% in the previous quarter. Loan growth momentum in Q1 FY23 is perhaps one of the best that you are seeing in last 4-5 years. So with rates being increased, net interest margin is either here to stay or see an improvement going ahead. So banks will see some of the treasury losses being reversed in Q2 as yields have improved. So credit cost has continued its declining trend and may remain on the lower side over the next 1 or 2 years. So capex-based demand on corporate side is still missing from the banking sector. It will take some time to come, as much of the corporate demand this time around has come from working capital. Retail loan growth is doing good, pretty good in fact, in terms of both growth and aiding the underlying profitability of the banking sector.
Abhishek, thanks a lot for getting us all of those details and taking us through that roundup. Very interesting. But with that, we're completely out of time on this edition of Trading Hour. For now, it's around 85 points higher on the Nifty. So we have been steady for the past hour or so, around 0.5% in the green, but we have come off significantly off the highs as well. Thanks a lot for tuning into Trading Hour. Halftime report is up next.